Okay, let's move on to the big news today. Let's bring on the panel here that you just sort of flash on the screen for Nigeria's Central Bank Monetary Policy Decision Day, the second day. So let's get started. Just introduce the panel here. One individual is still expected to join us on the program. Let me start from my immediate left. That's Michael Famuroti, who is the economist at Vetiver Capital Management. Vetiver is one of the investment banks and securities trading firm licensed by the SEC. It's good to have you here, Michael. Okay, now the second man in the middle, well, a little bit in the middle, is Robert over today, who is the head of research at Afrinvest. Afrinvest, of course, is also an investment bank. They have an investment bank, they have a securities trading firm, and they deal in what you call the high end of the market. And that's a lot about advertorial for Afrinvest. Good afternoon. Of course, it's a regular face here on the panel. And of course, the man who is at the far right, my far left there, of the table is the man called Temitope Amodu, who is a fixed income trader at Cotros Capital. Cotros Capital is also an investment and securities trading firm, also licensed by the SEC. So everyone here on the panel are licensed to talk. Aren't we?
Yes, we are.
Yeah, we all have license to talk. Temitope is the one licensed to trade, making money. Robert, you are the one crunching the numbers, and Michael is just talking the figures, just talking the macroeconomics. So today's a very big day. Let's get it started. And let's start with Michael, my immediate. What's your take about this fourth meeting from the central bank? A very quick one.
Yeah, so we haven't seen much activity from the MPC since the start of the year. I think the biggest change was whilst in January they sort of hinted at hopefully easing rates going forward, depending on the path of inflation. We've seen a flip over the last couple of meetings where, because inflation has been sticky, especially month-on-month inflation, that easing agenda is sort of out the window, and now what we're expecting is sort of keeping the status quo with a possible hike, although we consider that unlikely.
Okay, well, I forgot I was about to bring in, I think it was reported in the newspapers yesterday, and we still have it today, Godwin Emefiele at Nsukka in southeast Nigeria delivered a public lecture and says, look, there is no interest rate movement. We're not moving the needle anytime soon. Robert, you believe that this, like pre-MPC, it's just like the communique has already been read?
Well, yes, we think, much like you said, that the committee is probably not going to do anything about the interest rates. You know, there are two things now. If we're talking about easing monetary policy as it relates to MPR as a rate, you know, within the economy, then we may not be addressing what the issue is. The issue is about the aggregate supply of money in the system, which has been on the rise, you know, unfortunately, even though we've seen rates at significantly high levels. So touching MPR or tweaking any of the policy rates at this time may as well be, in quotes, a waste of time. So I don't think the committee is going to do anything about this. Yeah.
What is the market saying or thinking about today's decision?
Okay, thank you. Well, before now, market had been very, very quiet. And that was in relation to what we've just said. The market had been thinking that nothing will be done at the MPC. The only activity we've been seeing for the past 1 or 2 weeks is dependent on how liquid the market is. In the last few days, when market was liquid, you saw a bullish trend in T-bills market. And like yesterday, there was a bit of bearish trend, and that was because market was a bit tight. But aside that, market has been very, very quiet. And that was because nobody expected anything to be changed at the MPC that will be held today.
Robert, when we look at the 3 meetings and decisions that have been held so far in 2017, do you think there's anything in those decisions that can move the needle, not just for the markets, they should move the economy? We're just technically at half year, aren't we?
Yes, we've passed half year, if you may say.
Now, but focus, you folks who are in football, who are real football fans, we're past half year or half time already.
Okay, So yeah, now looking at it, if you've seen the position of the committee from the beginning of the year, talking about January, March, and the May meeting, they've signaled that yes, there's this commitment to tightening within the system, and this is underscored by, even though the committee has noted that we are seeing some moderation in inflation. You know, I mean the headline inflation. But generally speaking, if you look at the body language of the committee, with the exception of one or two of the committee members who still believe that we are not in the tightening cycle, so to speak, you know, by just keeping MPR at 14%. You know, a lot of claims, I mean, a lot of agitations, especially from the fiscal guys, who believe that MPR at 14% is harmful to businesses. But the truth is that if you are going to go traditional, there is no tightening. That's just
we heard the governor over the weekend, Central Bank Governor Emefiele came very hard on those who are criticizing him and who thinks that it is time to cut interest rate. Michael, in terms of do you think Emefiele was talking more now from the side of the economy rather than the side of the monetary side? They say, look, you folks leave me alone. I know what I'm doing. There's a problem with the fiscal side because there's a problem there. And in that presentation, very long, probably he mentioned what you call the 3 Fs. He said fuel. He said fuel is a major problem because we're still fixing it, whether it is fuel for the generators or for the power plants. Then we have what you call food, which is also a problem. And again, we got the last one, which he said is the FX. So talk to us about these 3 Fs from an economic point of view.
Yeah, so I think he was showing an understanding of the effect of monetary policy and how that is going to feed through to the economy. Because ultimately, whereas Nigeria does have a bit of an aggregate demand problem, given how last year a lot of consumer wallets were squeezed and so on, the impact of FX over the last 18 months up until recent has affected suppliers. And part of what monetary policy can do right now is trying to address that aggregate supply issue in the economy. Else what you have is a situation where when demand picks up, the economy simply just heats up because there's not enough supply to address that. And I think that's just the bigger picture view. In terms of the 3 Fs, there's a limit to the extent of traditional monetary policy tools in addressing some of these issues in Nigeria, given the way the markets are structured. So for fuel example, that's still partly regulated. So there's only so much leeway that monetary variables or tools can use to address that. So the most natural route would be through the foreign exchange market.
A quick word, yes, weighing on this, Robert, in terms of the banking sector and the financial system, it looks like all the time we have the conversation is like lack of transmission of credit to the rest of the economy to grow so that folks will have enough disposable, as Michael said, to buy petrol, even if it's at 145 or lower or even higher, or to get credit to run businesses as medium and small enterprises.
Yes, first of all, I'm most impressed that the Governor Emefiele, highlighted most of these critical issues, which is why I agree with him a whole lot that most of the things that we saw between 2015 and 2016, maybe up until the first quarter of this year before we started seeing the change, it's traceable majorly to FX. Now, but the question is that if the CBN and the committee would just focus on, because there are some of these factors that are within their control and some that are outside their control. If you've seen the development of how monetary policy has been deployed so far, even in the year, and you link it to what has been done in terms of FX, if only the committee and the CBN's management will focus on enthroning a truly flexible market in all its spheres, rather than have a flexible market. I mean, there's a part of the official market that is flexible. We have some other parts where it is based on a number of allocations and all of that. If you're going to solve the problem of these 3 Fs, if you're going to establish a market system, it helps us to resolve all of this, because the trickle-down effect is the impact you see on the banking assets, you know, most of them who have lent money to customers in the power sector, in the petroleum upstream sector, and we saw most of these loans crystallizing. I mean the effect of the FX issues crystallizing in 2016, and that's why we have the NPL level is still as high as I think the last reading was about 13.6%. You know, down from 14%, which we had by full year 2016. So if the CBN will focus on just approaching these problems, you know, talking about the FX, the fuel as well as the food, you know, which is, of course, it feeds in from FX and
there's a correlation.
Yeah. So if you address it through the market system, then we are on our way to solving this problem.